For a look at some of the top moving stocks in today's market, I'm joined by Jenny Horn, markets correspondent here on Schwab Network. We're talking about Netflix soaring after its earnings and multiple upgrades to speak of as well. Tell us all about it.
Right, Nicole. I mean, I really can't believe the magnitude of this move to the upside. I was watching shares after hours yesterday make a nice jump, but the fact that we've been able to hold on throughout today's session with some mixed overall sentiment is amazing to me. I think what Netflix's report really showed us is the fact that their password sharing crackdown has worked. We saw them add around 8.75 million subscribers this quarter. This blew past forecast and was its best quarter they had since the second quarter of 2020, which of course was the first quarter that was affected by the pandemic. So it just goes to show we're actually seeing as many people almost sign up this past quarter as they did when we were in lockdowns. That's amazing to me. But regarding some of those analyst upgrades, like you pointed out, KeyBank upgraded shares to overweight from sector weight with a $510 price target, saying they're entering 2024 as a cleaner story as paid sharing appears to have changed Netflix's ability to reach the next 250 million subscribers. They also see operating profit and free cash flow steadily ramping and buybacks supporting a 25% plus growth profile here for Netflix. We also did see other analysts, Morgan Stanley upgraded shares, also raised its price target to $475, also highlighting this paid sharing and advertising that were too high regarding expectations. But now they think that with some of the overall rising anxiety and falling stock price being taken into consideration, they do see right now the fundamental setup for Netflix working here, and they see it working into 2024, which I think is so important that a lot of these analysts are looking more long term and see nothing but positives for Netflix here.
Yeah, understood. At this point now, I mean, it's an amazing move. 15% is no joke. That's a big move in one day. How about Tesla, which is under pressure? I mean, that's down about 8% today.
It's the tale of two different earnings reactions. Tesla has been lower since we first got these numbers, and I would say anecdotally, we knew this was going to happen. We knew margins were going to be weaker. That was supposed to be pretty much expected. So that is something that I was sort of scratching my head at because it shouldn't be a huge surprise. But I know you're discussing more on this with Wedbush's Dan Ives later on in the show. We did see this note out of Wedbush reducing its price target on Tesla to $310 from $350, keeping an outperform rating, noting that the highest highs in some of the very challenging times for Tesla as well as Musk are in the last decade with their last quarter and conference call is still not an inspiring one. In a nutshell, they would characterize the conference call we saw yesterday as a mini disaster. I'm so curious to know more on what Ives sort of thinks of that, because I was agreeing it sounded very pessimistic, which was uncharacteristic for Elon Musk. So I know you'll get more into those numbers and those figures later on, but Tesla, it seems like when you're a little bit more pessimistic regarding your earnings call, it doesn't feel that surprising to see shares then react as such.
Yeah, look, Wedbush made the cut to $310 from $350. They kept that outperform rating. We talk to Dan Ives all the time. Not on this particular show. We're going to have Hatem Diab later from Gerber Kawasaki, and also Steve Wesley from Wesley Group, who actually sat on the board of Tesla at one point. So I'm really looking forward to a great conversation later. But to your point about Wedbush, I mean, they still have an outperform rating on this one. So that still shows the optimism there, and over $300 target. Thank you for all of that. Jenny Horn, good to see you. Appreciate it.